Thanks so much for tuning into this earnings conversation with Asian Paints. The leader delivered as it should, double-digit volume growth. Based on what Bloomberg estimates were, the revenue was a miss, but on the operational metrics seemed very confident. Though I was interested in understanding from Mr. Amit Syngle about what the comments that he's given for the quarters ahead, because there are some very strong positives and some very interesting thoughts around the margins as well. Mr. Syngle, great having you. Thanks for taking the time out.
Thank you so much for inviting me on the channel. Pleasure always.
No, the pleasure is ours. Mr. Syngle, a word on what happened in quarter one on the volumes front. I think it went probably as per plan, maybe better than what most estimates were. But the revenue was a small miss relative to estimates. How do you kind of think through this?
Yes, overall, when we look at quarter one, I think overall, I think the demand conditions were, relatively okay from what we kind of saw in the market to that extent. What we saw was that there was definitely an uptick with respect to the rural growths in terms of the tier 3, tier 4 cities in terms of what we kind of witnessed. The T1, T2 centers, in fact, matched the growth rate overall with the rural centers to that extent, which is there. We would have expected possibly the urban metro markets to kind of go slightly more to that extent, kind of really looking at upticking some of the luxury products demand to that extent, which possibly has depressed a little bit of a value in terms of what we are seeing. But having said that, we were also sitting on a very, very high quarter base of Q1 last year to that extent, where we had registered a 59% growth in value and a 38% growth in terms of volume to that extent. So therefore, I think the right perspective is to see the CAGR numbers, which for both volume and value over a 4-year period is almost about 17% in terms of what we see to that extent. But I think one of the other factors which really contributed to this overall volume and value growth which was there was our B2B business in terms of projects, where we have seen definitely uptick in the construction activities for the builder segment has done quite well. And I think the government spending has been a very, very strong story. So therefore, infrastructure spends have been good, which has been propelling the demand as far as the projects business has kind of gone in. So I think these are some factors which have really looked at giving us, I think, a relatively healthy value growth given the base and a strong volume growth which has kind of come in this quarter.
The monsoon quarter notwithstanding, Mr. Syngle, both the real estate conversations that we have with companies as well about launches, as well as finishing the existing projects, as well as the capex that is happening on ground, couple that with the rural quote-unquote green shoots, though you didn't say the word, but I'm just using it because I did hear you say that rural is looking okay. Does that augur well for volume growth for next 3 quarters combined? I know Q2 might be a separate story, but just trying to think out for the next 3 quarters.
Yeah, I think when we look at the overall guidance from our end also, we have been speaking about double-digit volume growth for the year to that extent. And we feel that definitely the rural uptick which has happened, I think the pace of the monsoons in terms of what we are seeing, I think, which is kind of really adding to the a little bit of the positive sentiment of the rural markets to that extent. The rural markets performance in quarter one, especially what we have seen in the month of June as well in terms of going ahead, or even the whole area of the projects business with the construction activity picking up to that extent, I think is kind of looking at talking about strong volumes which should come in, especially given the fact that the festive season, especially the months of September and October, I think are going to be big months from a retailing perspective. And therefore, I think on the back of this, we should see that definitely a double-digit volume growth is on.
Mr. Syngle, what about pricing? Would it be a factor of the kind of demand or a factor of raw material cost because crude prices have seen a bit of an uptick? Or could it be a factor of competitive intensity because there is one player coming in addition to the existing competitors that you do have over the course of the next 3 quarters?
So overall, what we have seen is that there is a very strong correlation with respect to how we see the raw material prices in the market and how we see our margins going forward to that extent. We've seen a deflation of about 2% in the quarter one which has just gone by, over a deflation which we saw in quarter four as well. I think that has been some which has contributed definitely to increase in margins in terms of what we are seeing together to now. But as we kind of look forward, we are also seeing some kind of acceleration in terms of the crude prices to that extent. The rupee dollar volatility is also there to that extent in the market in terms of what is there. So we are going to watch for the next about 4 to 6 weeks to see what is a definitive trend which is coming with respect to raw material prices, in case we need to kind of take any pricing corrections going forward. But having said that, given the fact that I think a lot rides on quarter two, quarter three, we are looking at upping our spends with respect to advertising and below the line measures in terms of really stirring up the demand excitement in the market to that extent going forward. As far as competition is concerned, I've always kind of maintained that many competitions have come and gone to that extent, and another additional one coming. Strategy, you are very, very strong with respect to what you are doing with respect to your brand equity and your other strengths with respect to supply chain and distribution and innovation which you bring to the market. So I think that's not a factor at all.
Yeah, I mean, which is why I said that one more competition for you. You are the leader there. So it's one more added competition. But I was just wondering whether pricing would be a factor of that, considering that a new launch, you might want to combat that as well if they are very aggressive on pricing. So would you keep some ammo on the table, or would it largely be a factor of what happens to raw materials?
So overall, what you see is that we have been fortunately, given the fact that the kind of brand we are and the equity we command, we have been commanding a price premium in the market to that extent, and therefore that's almost like a 10 to 12% kind of a price premium we command to that extent. So therefore, minor modifications in terms of pricing doesn't really kind of upset the demand very, very strongly to that extent, and therefore, as I said, pricing by competition should not be a factor at all in terms of looking, because some of those areas you can relatively attack with respect to some of your discounting measures and so on and so forth in terms of what you want to take. But as I said, we are more focused in terms of invigorating demand, looking at really the bottom of the pyramid in a very strong manner, and looking at luxury markets going forward. So I don't think so. Pricing should be a very, very big consideration there as we look forward.
Right. I've been doing conversations with a clutch of building material companies in different segments, Mr. Syngle. A few of them say that in a couple of large adjacencies that you've entered in, there is a right to win that you have, sort of, and people might be surprised with the kind of growth that Asian Paints shows in the non-paint side over the course of the next 2 years. You've done a bunch of things now. My question is, where is it that you yourself believe the next 2 years you will surprise the street positively with the growth in those adjacencies?
So first of all, I think, I wanted to speak about the smart care waterproofing segment of ours, which is a big adjacency, which we kind of really looked at 7 years ago to that extent. And I think we've delivered very, very strongly in terms of looking at it, almost about 300 new products which came in from our own innovation in terms of what we have seen. And we are now literally kind of leading the market with respect to the overall waterproofing business in terms of kind of goes. So similarly, now when we look at home decor, I think we are very clear that we are now energizing various categories to that extent, whether it is lighting, whether it is UPVC doors and windows, whether it is furnishings, whether it is window blinds, whether it is to that extent in terms of flooring. So we are looking at really galvanizing a lot many categories so that we can truly be a fully integrated home decor player going forward. We already have about 44 large format stores across the country. Next 2 quarters, we intend to put another 10 to 12 stores, which would kind of come in, which would again invigorate the market in terms of going forward. Our kind of commitment to the market is that we are looking at almost about 8 to 9% contribution of the home decor business to the overall decorative business going forward. Currently, we are at about 4% in terms of where we are, but I think we will definitely invigorate that. So we are pretty buoyant about this newer sector in terms of what is coming in, because we feel that it complements the coating sector. And I think it gives us a chance to kind of be part of the consumer decor cycle as we kind of go ahead in a very strong manner.
Okay. Well, I wish you all the best for that. One final question, Mr. Syngle. How do you see the economic activity for the next 3 quarters? I mean, forget from a paints perspective per se, but you have the pulse of what's happening in the economy. Do you reckon private capex at some point of time makes a bit of an emergence, or would the next 3 quarters largely be dominated by government-led capex?
No, I think both from the perspective of what we see in the market, we are definitely seeing that today, as relative to the rest of the world, I think the Indian economy is much more better in terms of a better footing. We also see the coming in of many newer industries in terms of really invigorating our market, whether it is in the area of electronics or whether it is in terms of appliances, or it is in terms of looking at auto and new other businesses which are coming into that extent, which is definitely fueling the market in a very big way. We also see a large number of hospitality chains kind of really announcing bigger programs, bigger construction, bigger properties in India to that extent. So therefore, I feel that relatively India is going to be a very, very strong market. We have upcoming elections next year to that extent. Therefore, the government spending is also on an uptick with respect to overall infrastructure. So given this kind of activity, both from the private sector as well as from the government, I think overall economy conditions are going to be much, much better as compared to what we are seeing in the rest of the world.
Mr. Syngle, great having you. Thank you for taking the time out, and all the best for the quarters ahead.
Thank you so much.
The pleasure is ours. Viewers, thanks for tuning in.